Welcome to this explanatory video on IFSC licensing options, where we compare two important regulatory frameworks, TAS regulations and BATF regulations. Choosing the correct license is a critical decision for any entity planning to operate in the International Financial Services Center or IFSC. Each framework comes with its own advantages, limitations, and compliance expectations. In this video, we will clearly explain the do's and don'ts, permitted activities, and key restrictions under both TAS and BATF regulations, helping you make an informed and compliant decision. Let us begin with TAS regulations, which offer a wider scope of permitted activities. Under this framework, entities can engage in both fintech-related services and technology-driven financial services. However, it is important to understand that all activities must be directly or indirectly connected to financial services as defined under the IFSC-SCA Act. The Act defines financial services to include a broad range of activities such as buying, selling, or subscribing to financial products, acceptance of deposits, safeguarding and administration of financial assets, insurance-related activities, asset management and investment schemes, maintenance and transfer of financial product ownership records, underwriting financial products, providing creditworthiness or financial standing information. This broad definition allows TAS license holders to operate across a wide financial ecosystem, provided their services remain linked to financial products or financial outcomes. One of the major advantages of TAS regulations is operational flexibility. There are no restrictions on the movement of existing employees, no restrictions on the transfer of old assets, no explicit restriction on continuation of old contracts. This makes TAS licensing particularly attractive for businesses looking to relocate or restructure existing operations into IFSC. However, this flexibility comes with one key limitation. The scope of services is strictly limited to those connected to financial services as defined under the law. Any activity outside this scope would not be permitted, even if operationally feasible. Now, let us move to BATF regulations. Under this framework, entities are allowed to provide services to any customer, provided the customer is non-resident in India. There is no restriction on serving a specific category of customer, offering operational freedom in terms of client selection. However, BATF is more restrictive when it comes to human resources, assets, and legacy contracts. Only 20% of senior employees can be existing or transferred employees. For example, if an IFSC unit employs 200 people, only 40 senior level employees can be old employees, the rest must be newly hired. Additionally, no transfer of old assets is permitted, no transfer of old contracts is allowed in any form. BATF regulations also place clear boundaries on the nature of services allowed. Only specific professional services are permitted, including bookkeeping, accounting, taxation services, financial crime compliance, and related activities. These services are exhaustively defined, leaving little room for interpretation or expansion beyond what is explicitly permitted. As a result, BATF licensing is best suited for entities focused on professional support services rather than broad financial or fintech operations. Thank you for watching this employee compliance guide for IFSC regulated units in gift says. If you need a customized compliance checklist, SOP, or presentation, feel free to ask. Stay compliant, stay confident, and keep your IFSC operations running smoothly. Thank you for watching this employee compliance guide for IFSC regulated units in gift says. If you need a customized compliance checklist, SOP, or presentation, feel free to ask. Stay compliant, stay confident, and keep your IFSC operations running smoothly. Scan our QR code and stay connected with us.